Hi, welcome to Eldercare's training. I'm Josie.
And I am Adrienne, and we are so grateful that you're here with us this morning. And we are really excited about this topic, which is
Mutual of Omaha and their long-term care product.
yes. And of course, we're going to have someone from Mutual of Omaha to talk all of the specifics. And I know myself and Josie, we're both going to be
Yes.
learning a lot too. As most of you are aware, Medicare supplements is definitely how we got started in the business. And then we grew into doing all of the other products. So if you didn't know, Eldercare does long-term care as well, and we are excited to have Mutual of Omaha here to talk about their products specifically. And if you have any questions at any time, if you're on Zoom, just find the Q&A box. So the chat is disabled, so you got to find the box that says Q&A, and that is where you can talk to us. We always want this to be a conversation. We want you to leave confident after this training and this product. So let us know. I see more people jumping in. Good morning, welcome. Give us some feedback right off the bat. Have you ever wrote a long-term care policy? Are you like, I don't even want to try to write one? Like, how are you feeling about long-term care products? I would love to know. I know we have some people on here that have written.
And I see some names of some agents who actually asked me some questions about long-term care. So this would be a great opportunity for you guys to ask those questions.
Awesome. Yes. Okay. Stephen wrote one a long time ago. Kenneth has never wrote one. So short-term care and home health only. Okay. Good to know, Donna. And I don't see any more coming through. So I'm going to go ahead and introduce our special guest. We have Maria with Mutual of Omaha. Welcome, Maria.
Hi, thank you so much, Adrian, and Josie for inviting me here today. My name is Maria
Absolutely.
Laura Rivas. I'm one of the account executives here at Mutual of Omaha, so it's a pleasure speaking to you about long-term care. I've been with the company for a long time. I'll tell you my age if I tell you how long. It's definitely over 25 years. I work with Amanda Blackburn, who's our sales director for long-term care product. And I'm really passionate, as well as Amanda, about long-term care. I've been doing the long-term care business starting from when I first started through Mutual of Omaha through customer service, and then working alongside Amanda Blackburn for close to 10 years now. So it
Wow.
is one of the products that we're very passionate about.
Well, it definitely sounds like you have experience. Is how I would say it.
Definitely. So it's my pleasure to be here today again to speak to you about long-term care. And I want to thank those. I think Josie mentioned some agents who wrote long-term care. If you haven't written any, hopefully this training here will provide you with some insights and new opportunities where you can help your client talk about long-term care. So my goal today is to provide you some product training, talk a little bit about a product and why we would want you to partner with Mutual of Omaha. So I'm going to go ahead through some screens. I'll begin with, first of all, what we'll talk about. Why is long-term care planning critical? Why partner with Mutual of Omaha? And then we're going to, at the towards the end, we're going to just do a little bit of overview of our website. If you haven't signed on to Sales Professional Access, then I'll talk about that as well. Spa, which is our agent website.
Yeah, we
So
like that. We like to be able
do
to
you?
have the
Okay,
agents leave, with something to do.
perfect. Okay, so um, let's go ahead and just take a quick look of why we believe planning is critical. Most people have heard the statistics here. I'll share the screen here. 70% of people over age 65 would need long-term care services. But did you know starting this year, approximately 10,000 baby boomers are turning 80 every day? This is a significant shift as the oldest baby boomers are hitting this mark. The influx of seniors is leading to a wave of demand for senior housing, healthcare, and other related services. These stats linked with the fact that for couples, there is a 91% chance of one spouse needing some type of long-term care service.
Mhm.
Not one of us can predict the future, but there is one thing that is certain. The cost of coverage for the services needed will continue to rise. I'll also share with Adrian and Josie at the end of our webinar a cost of care materials. You'll find a brochure, you'll find a link, and it'll have all the 50 states, and then you'll be able to determine the cost of care for an individual 10 years from now, 20 years from now. That'll also help show your client what the cost will be if they should need long-term care services in the future.
Yeah, so they can share that with their
yes,
clients.
exactly.
Okay.
They can sit with their clients and they can look at that and enter a state, we want to see if we enter 5%, what the cost of care would be in 15, 20 years, depending on their age. So historically has been proved out to be an increase of at least 5% year over year, in some cases as high as 30%. So it's important that we help more people understand the risk so they can help more consumers be prepared to handle the cost, and to help them understand if they are not planned or dedicated something, basically they're essentially dedicated or designated everything to long-term care. So if you haven't put away, have a long-term care plan, or made that plan to save something for the future if something should happen to you, basically you're at risk of having to depend on Medicaid, sell some of those assets you have in order to provide that care you need. Why Mutual of Omaha? Well, as I mentioned here, I've been with the company for over 25 years. Amanda, actually, I think she has 25 years this year. So as you can see, we've been with the company for a long time. Mutual of Omaha has been in the insurance business for 116 years and selling long-term care insurance for 38 years. We have over 3.7 billion under management to ensure future claim payments and offer a competitive, flexible portfolio to meet any client's budget. When we ask our long-term care specialist why they chose to do business with Mutual of Omaha, they tell us that it's unmatched support and training. It is the people behind the walls here at Mutual of Omaha that have direct access to you that makes a difference.
Just like you're here with us now.
Yeah. And I love to be, and we love to come back. So hopefully that's something we can do in the future. Okay. So what I'm going to do is discuss our two products. We have under our Mutual Care Solutions portfolio, we have the Mutual Secure Solutions, which is our traditional design product, and the Mutual Custom Solutions, which offers a pool of dollars. It's designed basically to help you have that plan for your clients. You're going to see more elimination periods, more choices of inflation options. We also have, outside of our long-term care traditional product, we also have a long-term care rider. I won't speak about that one, but it is available under our Income Advantage IUL and our long-term care, our life protection IUL product. So that long-term care rider is available under our life products.
And I think we've done a training on that before.
Have you?
So,
okay,
yeah,
perfect.
So,
perfect.
Anyone wants that training, let us know. And do you know if you're sharing this presentation afterwards?
I will.
Okay.
I'll be happy to share this presentation.
Thank you.
Okay, so here I'm going to go a little bit more into the two products we have. As I mentioned, the secure product is more of a traditional product, and then the custom is more of a product that you can dial down to what your client is needing. So under this, both of them issue ages 30 through 79. It cuts off at age 75 for New York. Under the secure product, we have a 2-year, 3-year, and a 4-year benefit limit. So if you're looking for that, then it's under the secure plan. Under the custom plan, you can go up to a maximum of 500,000. So depending on the maximum or the maximum monthly benefit you choose, you can actually go beyond 4 years. So you can actually go to 5 years, possibly even 6 years, as long as you don't exceed the 500,000 pool of money under the custom product. Our maximum monthly benefits range from $1,500 all the way to $15,000. So we actually did an increase from 10,000 to 15,000 about a year ago. Elimination periods, as I mentioned, you have more choices under the custom. As you can see here, we go as little as 0, 30, 60, 90, up to 365 days. Excuse me, I actually moved that too fast. Most common elimination periods that people use is 90 days, just to point that out. Of course, we have on our long-term care product, we have nursing home, assisted living, home health care, and adult care. We do have what we call the cash benefit, and I'm going to speak about these other features that are in our product. Okay, so I'm going to go ahead. Both of our products have these great features. I'll go ahead and talk about the cash benefit. The cash benefit you have along with reimbursement. So what that's going to offer you, and I'm going to share my slide here, is under the cash benefit, it's kind of like an indemnity policy. So there's no elimination period to satisfy. Your clients will receive a percentage of the policy's maximum monthly benefit in cash, and you'll be able to use this with any long-term care services. So once you met the eligibility to receive benefits, you've decided that you want to receive the cash benefit, you don't have to worry about meeting the elimination period, and we'll send a check for that cash amount to use how you wish to use it. One thing you need to remember that any time that you're using the cash benefit, it does not count towards the elimination period. So for example, if you decide once you met the eligibility to receive benefits, you decide your client wants to take the cash benefit, they receive a check each month. If they do that for 6 months, that period is not counting towards meeting the elimination period for reimbursement. So if after 6 months they decide cash benefit isn't sufficient enough, mom needs to be in an assisted living, we need to receive the full maximum monthly benefit, and you switch to reimbursement, then you'll need to satisfy the elimination period for reimbursement. But you can switch back and forth. And remember, once you met the elimination period, you don't need to meet that again. So you can switch back and forth. So if they use the reimbursement, mom's getting better, she's out of assisted living, she can come back home. We want to keep her at home. We want to be able to receive the cash benefit to help pay for services, such as maybe having the neighbor watch mom, and we want to pay the neighbor something. The cash benefit can be used. Having sister come over, daughter come over, she's driving over, she's taking mom to her appointments, she needs money for gas. The cash benefit can be used. We're not going to ask for receipts on how you're using the cash benefit. All we know is that that individual has met the eligibility to receive benefits.
And there's, I'm assuming, a list of, like an eligibility list of how to.
There is. So that's a good question. I definitely will show you towards the end where on our agent website you can find a specimen policy. A specimen policy will tell you exactly the definition of what the eligibility is to receive benefits. And it tell you, actually show you the activities of daily living, which they're not, which will be part of that definition. I'll show you where that's at too. Okay, low inflation options. That's another option that we have. I'll go back to the screen here. As I mentioned, some of the features. Low inflation options. Under our custom product, we do have lower inflation options. You can go as low as 1% to as high as 5%, and you can go in increments of 0.25. So our custom product, as I mentioned, the one that you can has a little more flexibility. You have inflation options that can be for 10 years, 15 and 20 years, as well as lifetime. Why would I want 10 years? Why would I want 15 years? One, it helps you reduce your premium. So if you're running an illustration for a 66-year-old female, you want to add inflation, a 3% inflation, but when you choose lifetime inflation, that premium becomes at a price point where it isn't affordable. Well, why don't we dial it back to 20 years? Why do we have to choose a lifetime inflation? Let's do a 20-year inflation and inflates for 20 years. The premium comes down. It's more affordable for your client. So as you look at the age, if you have someone older, 70, let's do a 10-year inflation. We don't have to do a lifetime. So those are the different options you have under the custom product 10, 15, 20-year inflation besides lifetime. Of course, you have lifetime, and then you can go as low as 1% all the way to 5% increments of 25.25. We also have what we call the buy-up option. Under the custom product, which I tend to quote a lot, that individual has the opportunity to buy inflation up in the future. And it's a great deal. So for example, if someone takes right now they have kids in school, they have kids in college, it's more affordable to take maybe a 2% inflation once in 5 years. Their kids are growing up out of school. Maybe they've had a situation where now they're not able to apply for more coverage because of an illness. They've have a certain medical condition that makes them uninsurable to apply for more long-term care coverage, and they see that eventually they're going to need long-term care. So they're keeping what they have, but now they want that to build up more. They can actually contact Mutual of Omaha in writing, request that they increase that inflation that they originally chose. In my example, I said 2%. They can buy up to a 3% inflation without any underwriting, just simply writing in, indicating that they'd like to increase that inflation. And they can do that all the way up to 5% inflation. They can always buy down, so that's not an issue. They can always decide, contact Mutual of Omaha and say, hey, I'd like to decrease my inflation. So that's not a problem. Buying up, you can do it for 20 years or up to age 75. So there is guidelines there to where you can buy up. And then again, any previous gains you had will stay on your policy. So if you do decide to buy up or buy back down, anything you've gained stays there.
Okay, I think that might have answered Steven's questions. He was asking if it
was he?
Compound inflation or simple inflation.
It's compound. So great question. We have compound inflation. Another great features we have are the riders that we have for partners. So we have a couple of cost riders that can be added to your policy. Shared care rider is one of our most commonly used optional riders that are available. These are when two individuals, spouses, have the same identical benefits. So you have to have the same inflation, same pool of money, same benefit period. You can add the shared care rider, and that allows you to share your benefits with each other. So if one should go on claim and use all their benefits up, but still needs care, they can dip into their spouse's pool of money and start using some of their benefits. They have to leave their spouse who isn't on claim with some type of benefits. So we're not going to have you drain all their pool of money, but it does allow you to dip into their pool of money after you've used all your pool of money and you still need care, to allow to pull some money from your spouse's benefits to continue that care that you might need. It also says that if your spouse should pass away, whether they used any of their benefits or left some benefits behind, any benefits that they left will go under that living spouse. So let me use an example. Jim and Jane have a 3-year benefit pool of money, okay? Jim uses maybe 6 months of it. He passes away. Any benefit that Jim left behind will go to Jane. Jane will receive so now besides her 3, she's going to get that 2.5 years that Jim left behind under her plan. So now she has her 3 years plus what Jim left behind. And if they added inflation, not only is her benefits increasing, but also Jim's benefits that have been added to Jane's policy because he passed away. Jim's policy, of course, terminates. He's not paying his premium because he passed away. Jane, her premium will not increase because she's getting that benefits. So there's no change in her premium because now that she's receiving the benefits that were under the shared care rider provision. So no change in her premium. We also have what we call the security benefit. The security benefit is a great option. It is a little cost there is a cost to that, but what it allows is if you have an insurable spouse, so you have both partners applying, underwriting comes back and tells you Jane isn't insurable. Her health condition doesn't make her insurable for long-term care. Jim might say, hey, I'm insurable. I like to go ahead and continue applying and take the security benefit rider. What this does is if Jim should ever go on claim, we'll pay him an additional 60% of the benefits he's using. So if he goes on claim, he's chosen a pool of money, and for that particular month, whatever benefits he's using for that month, 60% of that, we'll send him a check for the 60% of that amount that he can use towards the care of his spouse. So if Jim was healthy, he said, hey, I'm insurable, I'm okay, I'm working, my wife isn't insurable, but I'm assisting with her care and I'm able to work. So now he finds himself in a situation where he's on claim. If he has the security benefit, he'll get that additional amount that he can use now towards the care of his spouse. Again, it's important to remember that it depends on the person who is insured with our company. It doesn't matter if Jane is insured or if on claim. We're not looking at her information. We're looking at the spouse who is on insured with us. And if once he goes on claim, then we can pay him that additional 60% of the benefits he's using for that month in a check where he can use towards the care of that uninsurable spouse. We also have the joint waiver premium, and basically just what it says is the rider waives the premium for both partners when one partner is on claim. The survivorship, it's also, again, an optional rider. It's if the insured dies after the policy has been enforced for 10 years, no further premium is due on that insured's policy. So those, again, are cost riders, but are available. Just want to let you know, we do have a state-specific flyer that I will be sharing with Adrian and Josie. That state-specific flyer you should be using every time you write for a state. I'll tell you if there's something specific different about these riders that I'm talking about or any provisions on the policy for a state. Stay-at-home benefits. This is part of our benefits under our policy. So we have caregiving training, durable medical equipment, home modification, medical alert. This is all part of built into the policy. So if you have daughter who's mom's at home, but she needs care. So she's having somebody come in. Now, during the evening, maybe the daughter says, hey, I'm willing to fill in to help mom with her medications or anything she might need. There's training that we provide that individual to help with those services that that claimant might need. So we provide caregiving training, durable medical equipment, home modification. Maybe there's a ramp is needed to get into the home. So there is those part of the benefits built into the policy.
So they're on both plans?
Yes, on both plans. These
No
are on both plans.
additional-
And that's a good question, Adrian, that you mentioned. So some of these riders here, I did indicate it, and again, you'll get these slides. The joint waiver premium is under the custom. The survivorship is only under the custom, but the shared care rider and the security benefit, they're available under both the secure and custom plans. And this, of course, the stay-at-home benefits is available under both plans.
And the stay-at-home benefits are, you said they're built into the plans, but like
yes, they are. Yes, they are.
Them.
Yes. So in our sample policy, I'll tell you, for example, it might say 3 times the maximum monthly benefit you have for stay-at-home benefits. So if you have a 5,000 monthly pool of money, the provision might say your stay-at-home benefits are 3 times your maximum monthly benefit. So that would be, in this example, 15,000. So you have 15,000 to use however you wish to in these type of stay-at-home benefits.
Okay.
And again, our sample policy has a good explanation of how these work. Premium allowances, I think these are so great. So here are some of the allowances or discounts, in other words, that we have under our plan. So when you have 2 spouses applying and get issued, they'll each get a 15% discount. Anytime you have a client and maybe there's one individual applying, ask them, do you have a partner? Are you married? If they say yes, then they get a 5% discount. On the application, the third page on the bottom where you're filling out your clients, you'll have the definition of what partner is. So you're going to say, Maria, but what does partner mean? My client isn't legally married, but they've been living with this individual for over 10 years. They're like they're married. Yes, if they fit that definition of partner in that state, which is, you'll see that on the bottom of the application, they qualify for partner one issued allowance. Preferred, we give a 15% allowance for a preferred rating. When you run your quotes, please run them as select, which is our standard rate class. Our underwriters will always review the underwriting information. If they determine that based on their underwriting and medical information they received, that individual qualifies for preferred rate class, they'll contact you and say, we can offer you preferred rate class. So never worry about not that you didn't indicate preferred on your quote or on the application. That doesn't matter. Underwriters will review that. If they determine that individual qualifies for preferred rating, they will offer you the preferred rate class. And so that's a 15% allowance. Our underwriting guide, which I'll also share, does provide you what the criteria is, with the bill chart, and what the criteria is for preferred rate class. Association, that's a little bit more different. You do have to work in setting up that association. So if you work, and I'm just going to throw an example, secretaries of Nebraska, I'm just throwing something out. If you set up that association, work with that association, set it up, then that association is yours. Anyone who applies for long-term care under that association, you can give them a 5% discount. Please talk to me if that's something you want to work at. We do have information on our website, but it does require a little bit more work on your part to set that up. Producer. If you are a producer and you're thinking about long-term care, you can get a 5% discount because you're applying. And if you add your spouse on there, they'll also get the 5% discount. So producer, you'll get a 5% discount along with your spouse if you want to take out long-term care coverage with us. Common employer, that is a great one. I don't think much people know about it, but let's say, for example, and it doesn't have to be anything, any type of employer, but let's say you walk into a business, and let's say, I'm just going to think of something really quick here. Let's say they're a small, let's say they're a bakery, and they have, it's a pretty good company. They have maybe 20 employees. It doesn't have to be employee sponsorship. So we don't need the head of the guy to be there. You just happen to talk to one person who works from that place and they're interested in long-term care. If you get 5 people who work from under the same employer and they get issued, we're going to give them a 5% discount. Plus, we're going to give you what we call an employer number, common employer number. So if later on, when you, in that example that I gave you, there's maybe 20 plus people working in that company, but you get 5 who are issued. Anyone coming in the future, so maybe 6 months later, someone says, hey, I heard you sold so-and-so a policy. I'm interested in taking one too. I work for this company. And you said, okay, great. You know what? I'm going to give you a 5% discount because I have a common employer set up already. And since you're part of that same company that are already set up, I'm going to give you a 5% discount.
Maria, is there a minimum employer group size?
Again, it's not employer sponsorship, so it's not payroll deduction. They still go through full underwriting. What it does is it just says you all work for the same company. You're all applying for long-term care. We're going to give you a discount because your agent was able to get 5 people from this company issued, and now going forward, we can give you a discount as well. So just want to make it clear, it's not employer sponsorship. So we don't have payroll deduction. We don't have list bill. We don't have any different underwriting. It's just a way to give opportunity for an agent to be able to offer more coverage and get a discount for maybe people who work in the same company. Okay. What I'm going to go through, and I apologize, And I'm kind of, let me know if I'm running too short, if I'm running out of time, Adrian.
We do have a lot of questions that we're going to tackle once you get to where you're able to answer questions. But I'm going to let you keep going.
Perfect.
So
Thank you so much. Thank you so much. We do have our agent website. It's called Sales Professional Access. Okay. It's very simple. All you go to mutualomaha.com. And I'm going to actually, I did a picture for you. You go to mutualomaha.com. Over to the right, you're going to, from the sign in drop down, you want to click on Sales Professional Access. I'll ask you to put in your producer number. And then all you have to do from there is just register. You'll have Okta, so you'll have like a number you have to, I'll give you another way of accessing this. So once you've done all that, you'll be able to sign in on our website. And so this is the page again that you'll want to log on. Go to sign in, other site logins, sales professional access, enter your producer number, and then just fill in the information. Once you logged on the sales professional access, you'll look at this screen. So this screen is the home page of SPA, if you can see here. A couple of things that I wanted to point out that are very important. We just made changes, I would say a month ago, where we've added a new tab here. It's called My Business. This tab is pretty cool. So this tab will, when you click on this tab, you'll be able to see your business, your how your pending business is going, where underwriting is at, once it's issued, what the premium is. You'll even be able to see your existing business. There is some guidelines to that. So if you're, for example, set up in a way where you get paid directly through your upline, you might not have, you have a different view. Please reach out to me if there's issues of what you're seeing, because there are some rules to who can see this type of screen. But otherwise, under My Business is where you'll be able to click on here and look at your pending business, your existing business, and get information on your client. On this home page again, you'll under Sales Tools, as you can see here, we have our electronic applications. We do have an e-application as well as a paper application. So you'll be able to find our long-term care application under the link here, electronic applications. Forms and materials. This is where you're going to find that paper application. You'll also find your sample policy that I mentioned. That's always great. I use it all the time. So here's a sample policy. So you can see I use it all the time. It gives me definition. I have it right here on my desk. A sample policy. You'll also find marketing materials here, our underwriting guide, our product guide, all the information under forms and materials. WinFlex, even though there's a link here, that link will basically just give you instructions how to go to EBEX to download WinFlex.
What is WinFlex?
WinFlex is our quoting software. Great question. Sorry about that. It's our quoting software, and I'll actually bring it here. It's one of our quoting software. So WinFlex Web is the quoting software we use to quote long-term care. You can also, from that website, you can also, Sales Professional Access, you can also download our mobile quotes. So if you have a smartphone or tablet, you can quote there. We also have an online quoting tool for long-term care. But WinFlex Web would be the only one that actually will produce an illustration. So if you're looking for an illustration, you'll have to download WinFlex Web, and I can help with those instructions as well. It's fairly easy.
Does the mobile app require you to log in?
The mobile app is basically something that you're going to download from the app store. So you're going to download that on your phone. So it's real easy. You won't have to log in because it's just downloading it. I'll give you a quote right over the phone, but it's not going to produce an illustration, but at least I'll give you a quote. If you hear someone who's interested in long-term care, you're at the store and you meet them and say, how much would this cost me? You can actually enter their information, very simple, and you'll be able to give them a quote over the phone. It won't produce an illustration, but something quick for you to see.
Great.
I'm going to go back a couple of screens because I don't want, there's a lot of information. I apologize if I go over time. But as I mentioned, here, I'm going to go here to forms and materials because I did mention that there's a place where you can find your applications, your sample policies, and other marketing material. Doing this search that I provided here, Mutual of Omaha, the company name, new business, your state, long-term care. And then it doesn't matter if you choose custom or secure. If you're looking for an application or sample policy, it's the same for both the custom and secure. So all you have to do is do that. Fill in the boxes just as I have shown here on this screenshot. You'll find a list of material. You'll find a pre-screen flyer that help you do a pre-screen with your client. You'll find the application, as I mentioned, and other helpful materials that you need when doing a long-term care plan. And let me make sure. Under this policy management screen, so this is the screen that I mentioned here, the new tab we have under number 1. This policy management screen will help you look at your pending business, where you're at. So you have great case managers at Eldercare, but if you also 10 o'clock at night, your client's wondering, or you're wondering where your policy's at, log on to our agent website, look under pending, and look for any information case management has sent. So you'll be able to log on there and look under your pending to find any information that what case management is waiting for. Maybe they're waiting for a doctor's report to come in. Under there, you'll be able to find this information again under My Business Policy Management. And as you can see up here, these are the other available options that we have under this My Business tab. Okay. Here's something, an important reminder that I want to provide you. This screenshot shows the producer page that you'll see on an application. It's towards the end. It's a producer page.
Oh, I'm so glad you're talking about this. I totally forgot that, like, we had this conversation is how this training got started.
So this producer page,
Y'all pay attention. This is really important.
It is very important to us. It's very important to us. You probably have other companies that says, what's a commission code? We don't use that. Well, this specific one, D as in David, A as in Apple, this tells us that the business that's being submitted will go under Eldercare. So it's very important, if you remember, to put DA in those 2 boxes where it says for brokerage commission code. Just go ahead and type in or write in DA. That'll help us identify that that business will go under Eldercare.
Well, and that you get in that your production shows correctly.
That's exactly correct. That's exactly correct. Because especially this is where and believe me, I'm always working, trying to fix things because of this commission code if you have your med subs, or if you have another product, let's just say we used to have disability, right? If you had it with a different company and then you had your med subs long-term care with Eldercare, if you didn't put a commission code, sometimes that got coded under the wrong company, and it's a mess. And sometimes we get it fixed though, but it just makes things so much smoother when we have that commission code. We do allow up to 3 producers on an application. 100%, of course, you want to make sure that it doesn't go over beyond 100%, but just to let you know, we do have up to 3. Your producer number, if you don't know what that is, it just even helps putting the last 4 of your social on here is very helpful. So just putting the last 4 of your social security number, your name, if you don't know what your producer number is, even if you put your national producer number, that's also helpful. So you can put your national producer number on here if you don't know what your producer number is. Under whom should we contact with questions regarding this application? I'm going to leave that to Eldercare. I believe that they want to be the people who they want our case managers to reach out to. So Adrian, it depends on you guys, but what our case management team will look at is whom should we contact with questions on this application? And whoever they see on here, they'll reach out saying, hey, we're missing this or we're needing this. They'll reach out to that individual.
But if the agent wants them to reach out to them directly, they just leave it blank, right?
They can put their information in there as well. So they can, if they want to reach out directly, they'll reach out to the agent by putting their information, and they can leave it blank, correct?
Okay.
Okay. Make sure you use the application for where your client resides. Okay. So it's important that you use the correct application for where your client resides. Make sure you have
paper, right? Like an e-app wouldn't.
You still want to use it. So if your client resides in Nebraska, but they're on vacation with you met them because they're in Arkansas. If they reside in Nebraska, you're going to have to use a Nebraska app. They'll be signing the application in the state where they're at, right? But you always want to use the application for where they reside at. Okay, does that make sense?
Yeah.
Okay. State of residence application. Okay. Long-term care training, it's important, very, very, very important. I stress that you have your long-term care training in place before that client signs the application. Because if
I was wondering when we were going to talk about this.
It's very important. So if we see that long-term care was completed today, you completed today, July 17th, but that client was in town and she signed that application on July 15th, you're going to get a letter from compliance department saying, we're not taking this. It's a letter of education. So it's not nothing that we're sending to our, the state insurance department. It's just a letter of education saying, hey, we noticed that you took training after the application was signed. We were not able to continue processing that application. They won't even look at it. So don't even say, hey, can you continue going through underwriting while I get the training? No. Because of
So what all is required? Are you going to go over what's required for an agent to be able to sell this product?
Yes. So you have to have, what's required is, of course, your 8-hour training, initial 8-hour training. And I'll show you something on our, where you can find that as well on the screenshots. We have an 8-hour training that's required for initial long-term care. And then every 2 years, an additional 4-hour refresher course. Okay. So you complete your 8 hours, and then every 2 years, most states require a 4-hour refresher course. Most states are reciprocal, meaning that if you complete it for Nebraska, it's good for Iowa, even though you're, or it's good for Missouri. So if your client signs an application in Missouri, but you completed training in Nebraska, then that training that you complete in Nebraska could be good for your client who's you're taking an app in Missouri. On our website, and when you click on here under Sales Professional Access, under the Products tab, and I should have taken a screenshot. If I have an opportunity, I'll show you that, but it's not too hard to find.
We can always do another training if we need to.
I like to do that. Believe me, I like to do that. Under products, when you click on the drop down, you'll see long-term care, and then you'll see partnership. You can't miss it. Under partnership, we have a guide, shows every single state and what the training requires for that state. I'm also going to send that to you guys, so don't worry about looking for that. I'll attach that with other attachments that I'll be sending Adrian and Josie for that. Okay, so don't worry if you can't find it, and that'll show you every state and what training is required. Our licensing contracting, we have an 800 number. I'm always calling them. Don't call them. If you have any questions, any concerns, what do I need to do? Call them. That's what they're there for. Okay. We talked about the e-application. We talked about the application, paper application. That's a fillable app. So when you go on our website under the forms and materials, enter that criteria I mentioned to you, you can actually download an application and then fill it right there. So you have the application on your screen, you're typing in the information, you're asking the client the questions. So it looks really neat because you're actually not filling it with the pen, you're actually typing in. Once you have all that information typed in on your computer, your screen, you can actually put it in a PDF, download the application, print it out, and then you can either email it to your client and have them electronically sign it. So here are some of the acceptable electronic signatures we accept. iGo, DocuSign. As long as you include what we call basically a receipt that shows us the time, the place where it was signed, we accept any of these electronic signature methods. And then, so you can do that to your client. You can be on the phone. Your client can be in a different state, different area, and you can send it via email. If you don't do the e-app, you can still do, we do accept DocuSign, okay? And we talked about the quoting tools.
Yeah.
Here's a quick review of underwriting. And again, we'll be happy to share more information, more detailed information, how new business and so forth goes. with you in the future. But real quick overview. We do an MIB. We do medical.
We did have a question about
Yes.
that. I think it was Moon. She asked if it's the same height and weight chart for
Yes.
long-term care underwriting
Oh,
as the life products.
no, don't, no. Definitely don't use life's height and weight chart. Our underwriting guide that I'll be sharing with your with you guys will have our own long-term care height and weight chart. So don't want to use the life side. Okay, it is different. So what we do is the MIB, we do medical data, and we do a pharmaceutical check. So as you can see here, medical records are only at the underwriter's discretion. Telephone, ages 30 to 59. We do personal health interview. And then for ages 60 through 64, all applicants will get that health interview. And again, if you're between ages of 30 to 59, it depends, underwriter's discretion. We do a face-to-face 65 through 79. And then any ages younger than that at all, it's on underwriter's discretion. And I'll share this with you. And this screenshot is in our underwriting guide. So don't worry about this being here. It's all in our underwriting guide. Our contact, both guides that I'll be sending, in the back of the page, the last page of each of the guides have our contact information. So as you can see here, you can email your application. Once you put in the PDF, you can email it to epsupport@illumifin.com. We also have a fax number there provided to you. Another important number I want to point out is our underwriting, 800-551-2059. But I would always ask that if you have a client who has maybe taking certain medication, has certain medical conditions, and you want our underwriters to do a pre-screen, send it in an email. That way you have that information in an email. So if they come back telling you something different than what you were told in an email, then you can say, hey, this is what I received. This is what I was told, that this client would be a select because of this condition. So it's always good to have it in an email. And you can email your pre-screen to ltcunderwriting@mutualomaha.com. I'll be sharing this with you. And there's the numbers that you can also call. We also have a case management, and that I included there. We include our claims 800 number, our mail-in address, and then of course our customer service number.
Yes, thank you. We do have some more questions coming
Please.
through. Do you know if this is the last slide?
I'm sorry. Is this the last slide?
Yes. Is this the last slide?
Yes, it
so
is.
We can do questions. Okay, thank you. So Stephen had mentioned maybe talking about, and we're going to try and get through this kind of quickly, guys. I know we're over time, and I see that you're all still on, and want to say thank you so much for being on and being here with us. I'm going to hit these questions real quick. So if you do have questions, please comment them. But Stephen had asked something about talking about the cooling off period. I'm not sure if you know what he's talking about. That I guess there isn't one versus life insurance. And maybe he's talking in comparison to a Medicare appointment.
And I apologize.
Yeah.
I've never heard that term, so
Yeah.
I don't
he
think
always
we
has
use it.
the best questions. And then he mentioned something about talking about what an elimination period is, and
perfect.
If the long-term care is triggered by 2 or more ADLs, or what
Perfect.
issues.
Perfect. Elimination period is the period of time, and 90 days is the most common elimination period chosen for long-term care, period of time that you would pay out of your pocket before benefits begin. So we have, again, as I mentioned in our sample policy, we have what we call the definition of what it is to be eligible to receive benefits. And then, of course, it tells you the activities of daily living and so forth. And then once our claims department, because you'll have a person assigned to your case. Once they determine that you've met the eligibility to receive benefits, the clock can start ticking. So they'll give you the choice. They said, Mr. Smith, you met the eligibility. Do you want the cash benefit that can begin right away? You don't need to meet elimination period. Or do you want to do reimbursement? Well, we'll well, you'll have up to the maximum monthly benefit you've chosen to start receiving that after you've met your elimination period. And this again, 90 days is the most common. So once those 3 months, 90 days have gone by, you've paid out of your pocket for that particular time, then we can go ahead and our claims department will notify you once you met your elimination period. They will then notify you once your premiums have been waived. So it's important to know that waiver of premium is included in your policy. So once you met once our claims department determined that you met your elimination period, that we can start waiving your premiums, then they'll contact you and tell you your premiums are now waived. You should not stop paying premium. If you get a premium notice, you continue paying that, continue letting it draft from your account if that's how it's being paid until our claims department has notified you. So elimination period is the length of time that you would pay out of your pocket before the policy kicks in.
Okay. If you decrease the inflation, are you able to increase it later?
That's a
Can you
great
go up
question.
and down anytime?
Under the custom. So remember, under the
Okay.
custom product, we have what we call the buy-up. So you have 20 years or up to age 75. So definitely if you're younger, you have that 20 years or up to age 75. But if you're like 70, then you really got to push it. You say, I'm either going to have to buy up now because I'm going to be 75 pretty soon and I won't have that buy up option any longer. So once it
And it might have something to do with Felicia's too, because she's
yes.
saying is that buy-in based on the buy-in inflation based on their current age.
So that's great. So that's a great question. So if you originally started at age 65, you took a 3% inflation. Then if you buy up at 4%, you bump it up 1 more percent to 4%. It's going to be based on that age that you are. It's just that one percentage. Plus we have something called and I'm sorry, slipped my mind, but there is a figure there. And I can share that with you, but it is a calculation. But yes, the new amount will be based on that older age that you are for that percentage you're bumping up. But it's called a credit, but we do give you a credit and it's a calculation. It's very, I don't want to confuse you with that. It's really something that we do on our back end, but it is based on
the age.
Mm-hmm.
So that answered Felicia's question. Mm-hmm. Thank you. And Stephen made a great point that there are fewer and fewer carriers that are offering this product. So we do want to stress that to everyone attending today. Like if you are thinking about getting into long-term care products, Mutual of Omaha definitely has these two great ones. And they're one of the few that do. So thank you for sharing that, Stephen.
And Andrea, I wanted to just the gentleman who had that question that I'm sorry I didn't quite wasn't able to answer. You're more than, if you'd like to share my number with him, more than welcome to maybe ask a little bit more questions to better understand what he's asking.
And we'll do that with any of the questions on here. Everyone should be pretty familiar with how we do these. We always follow up with a call after and get all the questions and make sure they're all answered. And Donna had asked, do you still have the disconnected version of WinFlex that you can still use on your laptop without Wi-Fi?
I'm thinking they're talking about so WinFlex Web is only through eBEX, so that's not even ours, but that's where we quote long-term care. We used to have something called the Mutual Care Solution software. We no longer have that. That one,
you have to have Wi-Fi.
Yeah, that one don't use, please. The reason for that is if we make changes, we're not updating that old, that if you used to use that and you have it downloaded on your computer, delete it because we're not updating that version. It was called the Mutual Care Solution software. So WinFlex Web, you do have to go through eBEX and download that one. Otherwise, as I mentioned, the other ones, the other quoting tools like the mobile app.
Okay, and we can be doing a second part to this, guys, for more training. Donna had asked, either way, cash or reimbursement, is there money, pot of money they are gradually using up until there are no more money available?
That's
Thank
exactly right.
you,
That's
Donna, for
exactly right.
that.
That's a great question. So if you're
I
using,
read it right
so,
here.
so remember, if you're using the cash benefit, let's say you've taken a 3-year benefit pool, but you're using the cash benefit, that's going to last you more than 3 years because you're not pulling that full monthly benefit that you've chosen. If you've chosen 5,000, but you're only getting 1,000 each month for cash benefit, then your policy is going to last longer. So, and because you have inflation, of course, as I mentioned, that's building it up, that's having it last longer as well. An illustration is a great way to see what your pull is, what your cash benefit is through the different years of the policy. You're able to illustrate that using
And
WinFlex.
I'm going to end with this last question from Donna. She said, what percentage of people pass underwriting on these plans?
Oh, wow.
She said she heard it's 40%. Because that's the thing with long-term care is there is underwriting, and we want to make sure that you're all aware of this. And this is why it is so much better, which Stephen mentioned this, to get long-term care for your clients as soon as possible as they are younger in years.
As they're younger, it's less expensive. I'll get back with that question because that's more of our, I'll check with our underwriting team to see what they have on that one, but that's a good question. But you're correct, Adrian. The younger you are, the healthier you are, it's going to be less expensive. Women will be more expensive, just to let you know. So even if you have an older spouse and she's younger, she'll end up being more expensive because women tend to use the product, they live longer. And
this is just my personal assumption. If for some reason, Donna, that underwriting percentage passing isn't what you're thinking, my assumption would be is because people wait way too long to get long-term care. And one, they wait too long to get it and then they can't. And then second, they can't afford it when they are older as well.
You're exactly correct. And this is what I would say, Donna. Anything is better than nothing. So even if your client says, I can't afford it, let's start with something. Let's start with, even if it's a 2,000 monthly benefit, let's take a low inflation. Let's just do it for 2 years. Having something for long-term care, then it's better than not having anything. And starting it, just again, don't wait till you're uninsurable, where you have a medical condition and we're going to decline you. Our underwriting guide is I don't know why people don't use it more. It has all the medications, how we look at a certain condition. So it's very helpful. And again, I'll share that with you guys. It's something we definitely want you guys to use when you're with your client.
Thank you. No, if you're able to send all of this right after the training, we greatly appreciate that because we want to get it to these agents as soon as possible. And that definitely makes it easier for us and the agent if you're just able to give it to us in an email so they don't have to go.
Oh, I'd be happy to. I'll be
go
happy
looking
to.
everywhere. We're always dedicated to making sure our agents have what they need to be successful selling these products with us. And Eldercare is here for you. Mutual of Omaha is here for you. We definitely want you to be confident in offering, or just even having the conversation with your clients. It's not even that you're trying to sell the product. It's just really, really important to just have that conversation because more than likely they're going to be having it with someone else. All right. And yes, we're going to give you Maria's contact information after this, Donna, for sure. So thank you, Maria.
Thank you. Thank you, everyone.
Really appreciate it. For the first time, and we look forward to being here. That.
Thank you so much. Everyone have a great day. Thank you again.
Thanks, you too.